Well, I hope by now you've completed your taxes for 2018. I mean, you should have. April 15th has come and gone, but if you're like me, maybe you've filed an extension. Here's the thing I want you to understand about last year. Last year, in 2018, was the first year in which we recently had received a dramatic decrease in taxes for a lot of people. A lot of working people and small business owners, they saw a reduction. Now, if you look at the marginal tax brackets, this is really the lowest tax period of our life as it relates to federal income taxes. Now, personally, I don't think it's going to last. Now, that's not a political statement at all. In fact, I'm all for lower taxes. The problem is that as a society, we are getting a lot older. And as we get older, the need for things like Social Security, Medicare, Medicaid, that continues to grow. And those are what are called entitlement programs. People who reach that age are entitled to receive those benefits because they paid into the system. Unfortunately, because we're living a lot longer in the country, we don't have the money to fund these programs. And that is where my concern is. Now, as you probably know, we also have a fairly sizable national debt to the tune of $22 trillion, and we have to pay interest on that debt. Now, there have been a number of books written on this topic. David Walker's book, Come Back America, is probably one of the best books that I've read on the topic, and he's the former Comptroller General of the USA. So, personally, I think that tax rates are going to have to go up in the future, even though I don't really want them to rise. Simply because I don't think that you can grow the economy fast enough to grow the revenue needed to cover these entitlement programs and the debt service that this country currently has. So here's what I want you to do. I want you to consider the possibility that tax rates will increase in the future. So right now, if you are retired or about to retire, you're pulling out and you're pulling money from your IRA or your 401k. Maybe right now, for every dollar that you're taking out, you're sending, let's say, 20 cents to Uncle Sam. But consider this. What if you had to send Uncle Sam 40 cents, 50 cents, 60 cents? Now, you may think that that's outrageous, right? But historically, it's not. In this country, we've had tax rates as high as 90%. So how can you take advantage of the low tax rates today? Because that's the question. Now, there are some really good strategic moves that you can make to position your assets so that you have a tax-free retirement. So if they raise tax rates in the future, your 401k, your IRA, those assets won't be affected at all. Now, think about this. Not only that, but if you can do it right, you may also receive your Social Security benefits tax-free. Oh, wait a minute. You thought that your Social Security wasn't taxed already, right? No. You get to pay tax on that as well. However, with the right planning and the right strategy, you can potentially have a tax-free retirement. Now, this is what I always come across. A lot of people say that they have a financial plan, but what they really have in most cases is just an investment strategy and a bunch of products. They don't really have a plan that studies the situation carefully. And I want you to have that. So what can you do? Text Retire Tax Free to 555-888, all one word, and schedule a time to talk to me for about 15 minutes. Let's get an understanding about your specific situation. And if I think that I can help, I'm going to encourage you to come visit with me. Don't let this low tax period of time go to waste. As soon as we have a new election, things are going to change. At the very least, the low tax rates will expire in December of 2025, and you have to prepare for that.